it's important to note that this number, 6.6 million this past week, does not include all of those people who cannot get to the office to deal with their claim, cannot get on the phone, or the website keeps crashing. So there are a number of people out there who haven't even been able to put their claims in, although they want them to. So that's 6.6 million. The real number is probably even higher than that. I want to welcome Brian Belski now to the show. He is Chief Investment Strategist at BMO Capital. Brian, thanks so much for being with us. You just heard us talking about these jobless claim numbers. Does each additional week of historic high jobless claims basically dim the prospects of a V-shaped recovery when we do come out the other side of this pandemic?
Oh, good morning. No, we don't think so. And again, the reason why the market is recovering the last couple of weeks as we've seen these employment numbers is principally because we as investors know how to handle, know how to understand, know how to deal with these economic data points. And I think the proof is going to be in the pudding with respect to how companies' earnings are looking over the next quarter or two. 0% of zero is zero. And at the end of the day, we know that the longer this shutdown continues, the more that earnings are going to be hurt. The market is a fundamental creature. And what we've been talking to investors about with respect to what this means in terms of monetary and fiscal policy is clearly that monetary and fiscal policy does not create a bottom, but it fuels the recovery. And so I think people are way too enthralled with whether or not this is a V or a W or an M or a U. Stop trying to figure it out. Instead, look at what's happening on the company level. And there's going to be some good news and there's going to be some bad news. But the market's telling you that the less negative news that we're seeing in terms of second derivative on COVID-19 coronavirus is the key factor. Monetary and fiscal policy will fuel this. Stop trying to figure out whether or not it's an L or a V, and just let the market and the companies come back and get back to business.
Brian, just crossing the wires, we had General Electric come out and warn that their first quarter earnings will be materially below their prior outlook, warned slightly on cash flow, yet the stock's up about 3% in the pre-market. What does that tell you about investor risk appetite ahead of earnings season?
Well, we went back and looked at what happened after big pullbacks and recessions of the market, whether or not it was 1990, 91, or the threat of a double dip in 94, the Asian currency crisis in the late 90s, and then, of course, 9/11 and 2008, 2009. At some point, investors like to come in and buy momentum-type turnaround situations or, quote-unquote, companies that have been having fundamental problems, i.e., like GE. There's a certain tone, quite frankly, in the investment workplace that we want to get more cyclical, meaning industrials, materials, and energy. From our lens, in terms of being an investor and a strategist, we think those are short-term trades. So again, we think when you see these types of moves, they're more trading opportunities versus an all clear green light go in terms of a company like GE.
Brian, what do you think about these claims peaking? At what time, what week might we see that happen? Because we know that the rules have changed and now more people are able to apply for these unemployment benefits, the self-employed and contracted employees who normally wouldn't fall into that pool. When are you expecting to see a peak in claims?
Well, I think trying to call a peak in claims is like trying to call a peak in coronavirus or a peak in the market. It's a fool's game. I think it's really going to come down to human nature in terms of getting back to work. And I think the key thing in terms of trying to call a peak, I think don't try to do that, ladies and gentlemen. Try to call and look for a second derivative less negative. When we start to see claims start to roll over, still be negative, quite frankly, that's why the market and how the market rallied in 08, 09, and how it has rallied in other types of recessions. And stop trying to call some sort of a big call on that. Just see that as companies and people start coming back to work. Remember, companies are going to front end load some of these layoffs, and that's exactly what we've seen so far.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.